Welcome to Mark Arnold's Finance. Today I have a fun video. We're going to talk about Amazon and them buying iRobot, the company that makes Roomba. Before we get started, if you're new to my channel, be sure to subscribe. I'm somebody that's very transparent. In a second, we're going to look at my portfolio performance, which I share with every single video. And I'm very appreciative of all those that are subscribed and watching. So thank you so much. I also left a link down in the description in case you're interested. I do have some stocks in Robinhood, and right now they're offering a promotion where if you sign up with my link, you can get up to $600 in cash plus one free stock. So if that's something you're interested, be sure to sign up. That's free money, that's a free stock, why not? So let's get started with my portfolio performance. I am very excited to share that this has gone up pretty impressively since the last couple videos. I am now up over 5.5%. Not too long ago was I in the red. I now have over $2,200 in profits. And I do want to point out Amazon, which is one of the companies obviously we're going to be talking about in this video, and they're already up for me 23.79%. This is a company that I just started buying a few months ago, and it's gone up incredibly. And people always say Amazon's PE ratio is too high, they're overvalued. Well, look what it's done for me thus far, and I think it still has quite a bit of run to go. So I'm very happy with this performance. And we have some other companies obviously that have done well for me, but we also have some in the red. Tattooed Chef reports earnings on Monday, so I plan on doing a video there. Warner Bros. Discovery did come out with earnings. They weren't great. They're having some struggles. I might mention them as well in my Tattooed Chef video. But today I want to talk about how Amazon bought iRobot, but be sure if you have any questions on my portfolio to let me know. So as we get started, it's funny. I woke up this morning. My mom bought me this calendar that has kind of these positive messages. And this says, make mistakes. You're human, not a robot. So it kind of, I think this video was meant to be made. So let's get into it. Amazon acquires iRobot, the maker of the popular vacuum Roomba, for $1.7 billion, and it's an all-cash deal. This is impressive. Amazon has been on a roll lately. I think they're making this purchase to expand their consumer robotics portion of their business. In other words, they want to expand their smart home devices. They already have things like Astro Home Robot, which they unveiled last year. It's a $1,500 device equipped with Alexa that follows consumers around their home. And it's pretty cool. I looked it up, so I do want to show you this quick video on a few things that it does, and then we'll get right back to this video in a second.
Thought we weren't home, huh? You thought wrong. It's a good try, though.
What? Thank you. All right, I'm in.
That's pretty cool, right? Another part of the video shows a camera kind of coming out of this robot, looking at the stove to see if it was turned off. So, you know, definitely pretty cool. I have been watching a show recently called Westworld. If you've seen it, it's a pretty crazy show and gets me nervous about things like this, but this is definitely not even close to that show. But that is a pretty cool device. They also have things like the Ring products, you know, the Ring doorbell with the camera. They have voice-activated thermostats, microwaves, TVs, and light bulbs. So they definitely are pretty heavily into the smart home device segment, and this is their way of expanding. So this is Amazon's fourth largest deal, and a lot of them have been recently. So of course their number one biggest deal was they bought Whole Foods for $13.7 billion in 2017. And then they bought their number two biggest deal is MGM Studios for $8.45 billion in 2021, just last year. And then last month, they announced that they're buying One Medical for $3.9 billion. And then this iRobot comes in fourth place. Now, iRobot, they were founded in 1990, and they introduced the Roomba in 2002. Of course, this is a vacuum that goes around the house, picks up the debris off the floor, and it's been improving over the years. A lot of people I know says it's been a really great thing to have in the house, especially as of recent, because before it was kind of hit or miss. But they also have things like robotic mops and pool cleaners, so they have other hosts of products. And iRobot also has a subscription product program that offers equipment replenishment and other services. So any company that gets into subscriptions at least tries. I like to see that, because if successful, that provides reoccurring dependable revenue, and that's something you can increase over time, especially as people get dependent on it. So that's pretty cool. I'd be interested to see how well that's doing for them. Now, with this deal, the iRobot CEO will continue to run the company, and the shares of iRobot since this news has soared. They've soared massively. So if we look at the 1 week, and basically this has kind of been all in a day as well, but I took it out to a week, this company, this stock is already up almost 31%. So this news was very welcomed by investors. But if we pull out that stock chart to 5 years, they're down over 41%, almost 42%. So they definitely have been struggling massively. And it's almost like Amazon to the rescue for this stock for the investors. Before we look at the metrics, as you know, if you've watched some of my recent videos, I have a metrics chart where I compare companies. Well, today we're just going to look at the iRobot company, so by itself. And they report earnings on Monday. So if you're interested in that, maybe put that on your calendar. But before we look at the metrics to kind of see, is this a good deal for Amazon? I want to look at a few other financial things in a little bit more detail. So we're going to start with their cash position. If we see here, their cash and cash equivalents has been declining quarter over quarter. And actually it's their cash and short-term investments. I'm sure cash equivalents is included in that, but regardless, every quarter their cash position is going down. And to me, that's not a good sign. There's something going on here. Maybe higher expenses. Are they reinvesting? Who knows? But I do not like to see for 5 consecutive quarters their cash going down. If we look at their cash flow, this is the money going in and out. We will see that there's more money going out of this company in the last 4 of the 5 quarters than coming in. So again, they're having a cash problem in my opinion. Now, I thought, well, what about their debt? So if we look at iRobot's debt, we will see here that actually it's been going down overall. It's kind of in the downtrend, which I like to see. So that kind of offsets slightly the downfall in cash is this long-term debt going down. So maybe they're putting some of that cash towards their debt. If we look at their sales and operating income, this was definitely an issue for me, and if it weren't for Amazon buying them, this would be the main reason I wouldn't be buying them, because their sales are going down over time. They're having a problem selling things, and they did state that the times right now are just a little tougher. And because I think these are products that are high dollar products, and people, if they're going to cut money anywhere, it's going to be on buying things like the Roomba. And so their operating income has been negative the last 2 quarters. And if we look at their net income as a whole, we will see that it's not a good picture either. It kind of has gone deep into the negative from 5 quarters ago. It kind of went up, down, up, and then the last 2 have been severely in the negative. So far, not the best picture. If we look at their shares outstanding, we will see that their shares kind of went down slightly, but now they're going back up. So they're diluting shareholders. This might be their way, somewhat desperate way to get some cash. So I don't like that either. Now, if we look at their fundamental analysis, this is kind of a rating that I found that I like to look at. And we will see here, it's overall not a good picture. They're considered highly overvalued, low quality, have low growth stability, and they're less financially healthy. And we saw that. Their cash is going down massively. Their cash flows are going down. Their sales are going down. Their income is not good. It's at a loss instead of an income. So overall, I don't like any of this. So let's move straight into the metrics chart that I put together to kind of look at this company in a different way. So if we pull this up, we will see here, I'm just going to show you everything and we're going to go through it quickly. Their PE ratio, the last 5-year average, is at a 31.07. Keep in mind, Microsoft, which is always considered to be expensive, is at a 29 right now. So definitely expensive. Their EPS growth over the last 5 years has been negative, a negative 6.11%. That's not a good thing. The revenue over the trailing 12 months, the growth has only been 0.82, basically flat in my book, so really no revenue growth. Now, the revenue growth over the last 5 years has grown 18.83%, but if you divide that by 5, that comes out to 3 point some percent. That's how much it's growing per year, and that definitely trails inflation and the general stock market of average of 8 to 10%. So I don't like their last 5 years of revenue growth either. Their cash flow growth over the last 5 years is low at 2.84%, so they aren't able to really grow that much, so I don't like that. Now, their projected EPS growth, this is definitely a good thing. They're expected over the next year to grow 61.73%. Now, I do like this, but I will caution, this is a projection. It's somebody trying to guess what the future is, and we know those don't really turn out very often very well. So I'll take this with a grain of salt, but it's a good thing in my book. They do not pay dividends, so if you're a dividend investor, this definitely isn't a stock for you. Now, the debt to assets, this was a bright spot. It's fairly low at a 32.9%. I like to see that. Now, their profit margin to me is low, which isn't good. It's at a 36.48%. So not the worst profit margin, it's okay, but I like to see profit margins for most companies above a 50%. So not impressive for me. Now, their shares outstanding have started trending upwards, so that's why I put up, and I don't like that. I like to see shares outstanding going down, especially with more established companies. Companies in the beginning might, obviously increase their shares outstanding, but this company has, been in business since 1990. They've been on the stock market for a little while now, so I just think it's their desperate attempt to get some cash. Now, analysts are very bearish at a 0.5. That's almost as low as you can go. They don't like this stock. They don't see it as something that should be invested in, probably a sell. So that's not good for this company. Is this company easily replicated? I put yes. Now, they are dominant in their field, right? They're a brand name that everybody can recognize, but there are other competitors out there. But since they have probably the majority of the market share, they are strong in that field, but they're not something that it's a company that someone looks at and is like, oh no, that they're going to be very hard to replicate. I think there's a lot of robotics companies out there, and they can definitely get into this field and try to take market share from iRobot. So now, the future. What I think the future is, a 1 out of 10, 10 being the best, I rate them a 6. This is after the news of Amazon. If it was before knowing that Amazon would be buying them, I'd probably give them a 3. But now that Amazon is going to be buying them, they're a 6 for me, and anything above a 5 is a green. It's a positive. And why I say this is because Amazon now has the capital to put money into this business and make it successful. And so I do see it as having a pretty decent, bright future. So overall, looking at these metrics, they're not that great. And we saw their stock chart, we saw their cash, their debt. So a lot of things about this company aren't that good. So why in the heck is Amazon buying this company? Well, I think it comes down to one main reason. Amazon is trying to expand their ecosystem with these smart home devices. They want to become highly competitive against other competitors like Google and Apple. And I think this is their shot at doing that. And I think it's a good, smart, strategic move. And also, by having a robot that maps out your house, Amazon's going to get more information, which is going to help them sell their products even more because they're going to know what consumers have in their household, the setup, what they, maybe the size of the average household. They're going to get a lot of data off of these vacuums. And so I think this is the main reason. They want to grow, they want to dominate in this area, and this will allow them to better sell you their other home devices. The more they have, the bigger the ecosystem, the more people are going to stick with those products. And so this is exactly why I think they're doing this, and I think it's a great plan. And I think their big plan is to have Alexa control everything in your house. We saw they have TVs, light bulbs, microwaves, all that stuff. Now the vacuums, they have that crazy robot thing. So they're just expanding massively, and this is what they're doing, and they want to be more competitive. You look back on their other big acquisitions, Whole Foods. If you didn't know, they have grocery stores of their own called Amazon Go, and they have this cool technology called the checkout free technology, where you just walk in, get what you need, and walk out. There's no checkout process, so it knows what you're getting and it charges you. That was their acquisition to expand that area. And then MGM Studios, of course, they have Amazon Prime, which offers a lot of content, but that added a lot more content, which makes them even more competitive. So that was a good strategic move. Now they're buying One Medical, and they're trying to get into the whole healthcare space. They've kind of had a little bit of struggle there, so they're definitely trying hard, and we'll see how that turns out. But again, they're making these strategic moves, and they're being dominant and becoming dominant and growing in all these different areas: smart home devices, grocery stores, entertainment, healthcare, so much more. Amazon is huge, and they have so many different parts of them, and they're targeting these different sectors strategically for growth, right? This company is going to be a growth machine, I think, for so many years to come. And as we saw in my portfolio, they are already up for me over 23.79%, and I've been only buying for 2 months. A lot of people will say Amazon's too expensive. They're too big of a company. And if you've listened to my past videos, that is a big mistake in my opinion, to think these big giant companies can't grow more. Yes, they can. Amazon is proof of that, and I believe they are far from done growing. So I'm a happy investor with Amazon. This was a good decision by them. This is going to make them stronger, more competitive, and more dominant in that space. And I'm going to end with this. Elon Musk came out recently and said that Tesla will be the #1 company in market share, he believes. Well, I don't think so. I think Amazon will be the #1 in market share someday. They have a better shot at it, at least. Apple is going to be a tough one to beat, but I think Amazon can surpass Tesla. That's just my opinion. If you are a Tesla fanatic and you disagree with me, put some stuff on the table for me to see. But I think Amazon has way more businesses, way more stretch and moat and everything like that. And I just think this company, I wish I had a lot more money to put into them when they were lower, below 115. Now they're up to, I think, 140 per share. I bought in anywhere from 106 to 115. And so this company has already gone up a lot, and I think we'll just see it keep going up from here. But if there are any dips, I am going to add some money to this company because they are still in that growth phase regardless of how big they are, and I'm just still very bullish on this stock. So let me know what you think of Amazon buying iRobot. Let me know what you think of Amazon separately versus iRobot. All your thoughts, I'd appreciate them. I love to talk about these things. And so again, if you're interested in getting up to $600 and a free stock with Robinhood, my link is in the description. And let me know what you think of this video and what future videos you may want or request. I'd be happy to do that. And so with that said, hope you guys have a great day, and we'll see you next time on Mark Arnold's Finance.